Happy evening to all of you. Welcome to today's meeting on Bank Branch Audit, Q&A session series 1. Considering the bank audit season, SIRC of ICAI, for the benefit of all our members, has arranged 4 series of bank branch audit question and answer session on various dates. I appeal to members to register in large for all these series and get benefited. We have with us today 2 eminent personalities to handle today's session, C.R. Sundararajan sir and C.A.P. Anand sir. On behalf of SIRC of ICAI, I welcome both of you, sir. Thank you for choosing to be amidst us today. I request to the participants to raise their query through Q&A column in Zoom meeting available. Okay. It's my privilege to introduce Sundararajan sir as well as Anand sir. Let me start with R. Sundararajan sir. C.R. Sundararajan, managing partner of Messrs. SRBR and Associates LLP Chennai and Kochi, started the firm in 1990. Qualified in the year 1990 after articleship under Mr. K. Srinivasan of Mrs. Sundaram and Srinivasan Chartered Accountants. As a resource person, he has addressed members and students on various subjects of professional interest on audits, accounting, code of ethics, etc. at various CPE study circle meetings, seminars and conferences organized by SIRC and its branches of ICAI, NIRC of ICAI and branches of WIRC of ICAI. Addressed members at other professional forums such as the Chartered Accountants Study Circle, Association of Chartered Accountants, Society of Auditors, etc. Addressed bank officers at the staff training colleges of banks, Reserve Bank of India, and government officers at the Controller and Audit General Office, C&AG. Addressed members and students on professional subjects at student seminars conducted by SIRC of ICAI, ICWI, and ICSI. As an author, served as an active member of the editorial board of CASC Bulletin, a monthly magazine of the Chartered Accountants Study Circle, Chennai. Co-authored the book on bank audit checklist published by the Chartered Accountants Study Circle Registered. Served as a member of the study group of CASC that released as a book, Corporate Audit Checklist in 2003 and subsequent editions and reprints. Contributed articles on subjects of professional interest in CASC Bulletin. As an office bearer, he has served as a convener of a committee of management of the Chartered Accountants Study Circle Chennai for many years. He served as a treasurer, secretary, vice chairman, and chairman of the International Fiscal Laws Association Southern Region Chapter, and served as a chairman of International Fiscal Laws Association Southern Region Chapter, serving as a member of Executive Committee of International Fiscal Law Association India Branch, New Delhi. Served as a member of the various committees of ICAI and also of SIRC of ICAI from time to time. Has served as a co-opted member of various committees of ICAI, New Delhi, serving as a chairman of the annual residential conferences committee of CA Study Circle continuously, serving as a part of organizing team for various study circle meetings, seminars, conferences and residential programs of CA Study Circle, SIRC of ICAI, and All India Federation of Tax Practitioners. He has addressed and attended various conferences, seminars, and meetings of professional interests all over the country. He is a life member of Chartered Accountants Study Circle Chennai and a Society of Auditors. He is an annual member of Association of Chartered Accountants Chennai, International Fiscal Laws Association, Institute of Internal Auditors. As a socialite, he was the president of Lions Club of Chennai Super Kings, District 32A A1 for 2010-11, and district chairperson for various activities in the Lions District A1. Trustee for various charitable trusts created for the benefit of professionals, family welfare and education aids. He is an active blood donor. As a professional advisor or consultant for various trust, non-profit organizations, educational institutions, corporates, bank statutory audit, concurrent audit, revenue audit, inspection audit, companies statutory audit, internal audit, manufacturing, trading, service, marketing, information technology, IT-enabled companies, hospitality, infotech, finance, real estate, advertisement, etc. He is also involving in due diligence audit of companies and educational institutions for takeover, income tax consultancy planning, appearing before appellate tribunals and handling other procedural matters. He is a secretarial complaints and liaison matters also he is dealing with. Members of the Financial Reporting Review Group, FRRG 1, Chennai, formed by the Financial Report Review Board of ICAI for reviewing the technical review reports on financial of large corporates for the past 3 years. He is an empaneled arbitrator for NSE in Chennai. With this brief, I present before you R. Sundarajan sir. Let me also introduce Anand sir. Anand sir is a partner in Anand and Company Chartered Accountant Chennai, article trainee under CAG Narayana Swamy, partner S. Venkatraman Co. Chennai during the period 1993 to 1996. He is the managing committee member of a Chengalpattu district branch of SIRC of ICAI, AITT faculty in Chengalpattu district branch of SIRC of ICAI. In practice for more than a decade and handled audit of corporates and non-corporates in the field of taxation, central statutory audit of bank, audit of educational institutions and trust. He has presented papers in Tambaram CPE Study Circle, Hindustan Chamber of Commerce, T Nagar West Mambalam Study Circle, Kanchipuram District Branch of SIRC, various private educational institutions, schools and colleges. He also holds master degree in business administration in international taxation. With this brief, I hand over the proceedings to Anand sir and Sundarajan sir to handle today's session. Over to you, sirs.
Thank you, Rahman, for the breathless introduction. We have our secretary, Mr. Arun.
Yes.
Has joined us.
Yeah, may I now request Arun sir to give a formal welcome address to our delegates and our speaker, please. Arun sir.
Arun sir, also adjust camera because I would like to see you fully. Yeah.
So you are muted, sir.
You muted, sir.
Arun
you
sir,
are under mute.
Because I am in a bank audit, the resources is not properly available, network and other things. Yeah, that is why the network is not good, sir.
Okay, doesn't matter. Carry on. There is nothing posted in the open questions.
Nothing, sir. Nothing. You can start.
So without questions, what is that? We will have to start. Okay. Anand.
Sir, generally.
Okay. Okay, Arun, I'll take it.
Not explaining general things, sir.
Okay. Good evening, friends. Thank you very much for having joined this program. We have around 13 participants, out of which 4 of us are organizers. So only 9 members are there. But small is beautiful. I don't mind. I would like to address this small group of 9 people, probably with people more joining.
Yeah. In the due course, people will join, sir. More than nearly 100 people have registered for today's program. In the due course, members will join.
So basically, what I would like to.
Yesterday also like that only, sir. At the start time, we have only 10 members. So after that, it is go up to 60, 70, sir.
Okay, doesn't matter. So what I would like to start with is, basically now the bank branch audit has already been commenced in most of, in fact, 2 of the people today called me and asked me whether one UDIN is required or 2 UDINs is required. So which means signatures has already been started. That is the reality today. We are very glad that members have already started the work and almost completing also as stipulated by the respective bank head offices. But a couple of serious precautions which we have to take up now is importantly. Number 1, once again, the same issue of NPA classification is definitely becoming a serious issue this year also, because last year it has been made very, very categorical that the NPA classification has to be done by the system in automatic manner without manual intervention. This has to be reported in the LFIR also. But what I understand, even this year from various branch auditors is there are lots of manual interventions that are happening. So whoever is listening this session, when you are going to do the attest function of a respective batch, please be very, very clear. Don't have that reservation at all. Straight away, ask the question as far as NPA classification is concerned. In the meantime, you have got a question. Let me go through the question and then once again go back to the presentation which I was looking to. SIRC floating rate interest term loans with increase in interest rates, EMI is not increased, but tenure is supposed to be increased as per sanction. However, tenure is not increased in the system. interest is correctly calculated and appropriated from EMI as per the revised rates. What is the implication in the current year? As the outstanding at the end of the tenure will reflect overdue on completion of original tenure, no income leakage, no overdue in the next current year. How do we treat this situation? My dear friends, please appreciate. I hope, I don't know whether everybody else is seeing this question. For the benefit, I will have to read it once again.
Sir, shall I read on your behalf, sir?
Yeah, please do it, sir.
Yeah. This question is from Bavadarni Karnakaran. She has asked, the floating interest rate term loans with increase in interest rates, EMI is not increased, but tenure is supposed to be increased as per sanction. However, tenure is not increased in the system. Interest is correctly calculated and appropriated from EMI as per revised rates. What is the implication in the current year, as the outstanding at the end of tenure will reflect as overdue on completion of original tenure? No income leakage, no overdue in the current year. How do we treat this situation?
The answer is very, very simple. Please understand, all the bank software without exception, they calculate NPA on the basis of the last installment due, not on the first installment due. So it will be to the disadvantage of the banks that the tenure is not extended. Let me be very clear. For a moment, let me take a case of a loan which is supposed to be getting closed on 31st of March 2025. So as on 23, we should have only 24 installments. Because of the change in interest, the 31/3/2025 should have been increased to 31/3/2016. For a moment, let me say that 1 year is extended. So in that situation, the last installment is automatically getting shifted to March 2026. In that situation, there will be 36 installments which will be outstanding. So what will happen is the system will calculate as on this date, how many installments should be overdue from that date. What is due, they will calculate, and difference is overdue. So banks will not by any hesitation stop without changing the date. It will automatically change only. It's a surprise that in that particular case, it has not been changed. If it has not been changed, what we can do is we can only give a remark in the long form audit report, because if you have that specific information regarding that change in interest, because of that, that change in tenure also has to happen. You will have to only mention in the system report, in the long form audit report, that it has not been done, provided you have the clear clarification as far as this is concerned. If you don't have that, you are free to classify the account as NPA because you don't have the information. So basically, you should have the information. Because of the interest change, this modification is being done. Modification has not been only done in the system, that they should give a concrete commitment, which will not be possible. Please understand, it would have been done because it will be against to them. It will be dead against to them, so they will not do it. Please correctly verify that. Probably they are giving a wrong impression that this interest, because of the interest change, it has been done like that, sir. It's a wrong impression. You please examine the correct example and then get forward. Bhavadani, I think I have clarified you. If you have any further question, you can still ask.
Sir, this is Arun, sir.
Yeah.
Sir, recently we have a problem throughout few banks. All concurrent auditor requested to sign the LFIR of the particular branches. Those were all not allotted. Whether it is against our ICAI codes, or because concurrent audit means it is a kind of internal audit only. No, okay, whether internal auditor can sign the statutory auditor, I think this doubt is many people is having in their mind.
Fantastic doubt, not related to bank audit, related to code of ethics. I love that question. But what has happened is, this long form audit report is a management report. Please understand two issues. One is the long form audit report signed by non-concurrent auditors are not reported to the statutory auditor. The report is addressed to board of directors. Please examine the respective concurrent auditors, concurrent auditor signing the long form audit report. That long form audit report is addressed to, not to the central statutory auditors, it is addressed to board of directors. So we are functioning as a part of the management. And signing a long form audit report is not in contradiction. Only when you are asked to sign the financial statements of the bank, a concurrent auditor or internal auditor cannot sign the balance sheet also. Long form audit report is not an attest function. Long form audit report is only a management report. It is not an attest function. It is not part of the main audit report at all. Long form audit report is not even an annexure to the main audit report. Long form audit report is only an appendix. It's a management report. It does not have the functionality of a statute function. Only you cannot do a statutory function when you are a concurrent auditor. So in this scenario, this is not conflict of interest, number one.
Okay.
Second issue, Reserve Bank of India in the circular dated March 2023, where they have made it very, very clear in respect of unaudited para 5, if I am right, para number 5 of that particular circular dated March 23, they made it very clear wherever the branches are not audited, the concurrent auditors can certify the LFAR addressed to the board of directors, because it's only a long form audit report. It is not the balance sheet signing. Am I clear, Arun?
Yeah, yes, sir. It is clear, sir. So again, in addition to that question, there is another doubt in everybody's mind that even some branches concurrent auditor allotted some other branch to sign the MOCs, only sign the IRAC norms. Whether that is allowed, sir, but how can we
MOCs you cannot sign, sir, actually. MOC, because it becomes a certification. MOCs we cannot certify. Only long form audit report we are authorized to.
Okay.
In the long form audit report, they can mention about the MOC.
Oh,
because they have to say that this classification is wrong. So an MOC has to be passed.
Oh.
So they don't have to sign the MOC, because MOC is signed by the management only, because it is not an auditor. They are not supposed to sign. But in the long form audit report, they can say that an MOC has to be passed. So that and this has to match. They are not authorized to sign the.
It is not the branch of they are doing concurrent audits, sir. It is a different branch, even different branch of same bank.
Who is asking to sign?
Bank.
They cannot see whether
No,
it is
bank, what they, sir, now especially for the Indian bank, what they did, sir, the non-branch auditor, they select branches, they select and send it to the existing concurrent auditor to sign the MOC alone, along with the balance sheet, all financials. They said along with the financial, they have to sign a MOC. That is what they send all the letters. Even many of them rejected the claim, rejected the appointment of bank. But however, whether when we are about that particular bank's concurrent auditor, whether we are allowed to do the MOC signing or any other certification of other branches of that particular bank.
No, the point is very, very clear. You are a concurrent of a particular branch. You are asked to sign the MOC of another branch.
Yes.
Right? That is, yes. I am appointed audit. I am the concurrent auditor of Padi branch. They are asking you to sign the MOC of Ambattur branch, which is not coming under audit.
Yes.
It is not acceptable. The reason is, I am the concurrent auditor of the bank as a whole. That is first issue. And moreover, the MOC signing alone, is there a separate appointment letter or letter of engagement which is being signed?
Separate appointment letter with the very meager fees.
Leave alone the fees. I am never concerned about the fees as far as bank audit is concerned, because that is not, if you don't want, you don't do it. That's a different issue. But the point which I want to drive home is, what is the question which is being asked? If they are asking us to sign the MOC, whether the terms of engagement letter is suiting to your requirement of the ICAI regulations, which has to be examined, because I am not supposed, I am not even doing the audit. When I am not doing the audit, how do I certify the MOC? Which means I am seeing all the advances. See, for example, if in MOC there are 3 transactions which are available, I have to sign the 3 MOCs. If only 3 items are there, am I certifying the correctness of these 3 entries, or we are certifying that I have verified all the NPA, only these 3 are NPAs? $1 million question.
Yes.
So please understand, when we have to tell this, that is why I'm surprised about this particular point. I would like to see an appointment letter from the bank regarding what is that they have been asked to sign. For this item, if they are asking, they are saying that you will be paid an amount of 10,000 rupees or 15,000 rupees. My sincere request to the members is don't accept it.
Okay, sir. Sir, same way, whether they are requesting us to do the internal controls, internal control system by the concurrent auditor, particular thing, but this was happened before the March itself. All the concurrent auditor requested to sign the internal control as well as by the statutory auditor. Whether the that can be signed, no, sir. It is not a problem.
If the internal control for system signing is part of the concurrent auditors, terms of reference already, you can certify. Otherwise, this certification is also not acceptable, because it becomes a self-review threat, because you have been doing the concurrent audit all along. Having a concurrent audit, whether it is a good system or not, that itself is one of the questions in IFSC.
Yes.
Internal financial control reporting, One question is whether having the concurrent audit is a good custom or not. How can I certify when I'm doing the concurrent audit? It's not acceptable. It is dangerously trespassing the self-review thread, not acceptable.
Okay.
Sir, there is a question again from Bhavadarni Karnakaran. She is asking, loan tenure is not increased in the system. That means at the given tenure, bank will not be able to recover the principal amount. Does it not amount to postponing the accounting adjustment to the end of the tenure? As at the balance sheet date, the principal amount outstanding doesn't reflect true and fair view.
See, what happens is, it is an EMI-based loans. So as long as EMI-based loans are that concerned, I have to determine what is the EMI amount. Let it be even 1,000 rupees. For example, I have taken a loan of 1 lakh. 1 lakh divided by 100 is 1,000 rupees. Actually speaking, EMI should not be 1,000 rupees. At least it should be 1,500 rupees because interest has to be accommodated in that. For an example, I'm telling you. But by mistake, the branch has decided only 1,000 as an EMI. Once they have decided as EMI as 1,000 rupees and given a sanction ticket, as long as this 1,000 rupees is recovered regularly, there is no one EMI which is outstanding more than that. It cannot be classified as an NPA. It is not provided in any law, but I am telling you on practical side, once an EMI is decided and as long as that EMI is recovered, you cannot classify it as an NPA. In the example which you have given, the EMI has to be recalculated. The EMI has to be rechanged or the tenure has to be changed, for which a fresh sanction letter has to be there or a notification has to be there and taken acceptance from the customer. That customer will agree that henceforth I will be paying this EMI with the extended tenure, or I will increase the EMI for the same tenure. There will be a corresponding. For example, I am only telling you an example. In HDFC, whenever there is a change in they call us, ask for a reverse calculation, take a signature. Once that signature is there is no formal sanction letter which is required. There should be an offer from the branch and acceptance from the customer. That is the sanction. Once that is there, and according to that, the EMI is being calculated once again or recovered, you should not have a problem. Once again, because of that, it is not going to affect the true and fair view, but it is not extended. The tenure is not extended. Again and again telling you, madam, it is not possible. It will not be possible in the system. The tenure is not extended. If it is not extended by the system automatically, there is an issue in the system, which you have to give in the systems report in the LFIR. It will not be having an effect on the NPA classification. It will not affect the true and fair view also, because as on date, whatever be the EMI which is already fixed, that is being recovered regularly. So the branch, the particular borrower can question you once you say that you have fixed an EMI of 1,500 rupees per month. I am paying regularly. How can you classify it as an NPA? Because if you classify the account as an NPA, his account will go for a 6 in civil rating. So that is not acceptable by any borrower. So he will definitely raise an issue. So ideal thing is they have to rechange the schedule. They have to modify the schedule in the system. If it is not happening automatically, we have to give it in the form of a long form audit report only, and it will not have an effect on the classification.
Sir, I will send that model appointment letter for your WhatsApp, sir.
Please send it.
Yeah, already sent it, sir. You just check the terms of references.
Kindly reject the appointment, sir. That's all.
Already.
Probably you will have to
rejected.
have the danger of rejecting the concurrent audit also, because this is as good as doing an audit. The engagement letter which you have sent to me is as good as an audit of the branch. For doing an audit of the branch, if they are going to pay 5,000 rupees per branch, absolutely not acceptable. Don't take any chance in this, and make it very, very clear. it is not viable to do the audit and give the certification. So we are rejecting this proposal.
Yeah, many of us is rejecting the same, sir. We are rejecting and inform the management also.
Engagement letter is very, very clear. It is an audit only because they are making it very, very clear. You are supposed to verify the financial statements, balance sheet, profit and loss account, and asset classification, income recognition, IRAC norms, and submit certificate of compliance of MOC, which means it is as good as an independent branch audit only.
Yes.
So in that situation, it is not acceptable for doing at this cost. Accept straight away reject it.
Yeah.
Bhavadarni is asking one more question. At least one person is very active. Rahman, you are reading or shall I read it?
Sir, I will read it, sir. No problem, sir. Substandard advances provided for security valuation is less than the balance outstanding. Will the difference be treated as unsecured portion for the purpose of provision requirement?
Anand, you would like to take the question?
Yes, sir.
Please.
As far as this provisioning is concerned, whatever the secured portion and unsecured portion is calculated based on the system, what is the amount which is being paid into the system. The security portion which is being paid into the system will get automatically populated for provisioning purposes. So whatever the outstanding balance, less secured portion will be treated as unsecured portion, which will have a higher weightage. Arun, is am I audible?
Yeah, it is audible, sir.
What is the unsecured portion? It will calculate based on the security which has been paid in the system, and it will be provision will take care as per the unsecured portion. The secured portion balance will have a lesser provision. So, as far as some branch auditors are concerned, whenever NPA is checking the NPA, kindly check whether the secured portion amount which has been paid in the system is correct. This you can, depending upon the size of the branch, based on the sample, and you can take up and find out what is the security value which has been paid into the system. And there are instances where we have noticed that when multiple loans are sanctioned having a single security, the same security value has been paid in all the loans, resulting in the unsecured portion showing a lesser amount. Finally, check those items when you have a multiple loans for a same person which is turned into an NPA.
Sorry, suddenly I went off. Sorry. Until we get some questions, Anand.
Yes, sir.
You can have some value addition by way of this using Excel, where you can really capture these items.
Two important files which we come across in the reports folder is the loan balancing file and the CPE.
I think the sound is it okay, Rahman?
It is a little bit low, sir. So Anand sir is a little bit low.
Yeah, is it audible now?
Now audible,
it is now it is audible, sir.
Yeah, fine. Two summary files. There is a loan balance file and the CCOD balance file. If you can convert it to Excel, it will throw light on selecting the sample and also in the audit process itself gets simplified when you convert that entire file into an Excel. So we can filter based on different conditions, what are all the parameters which is available. Say if you wanted to select housing loans alone, you can filter with the filter condition, the housing loan alone. And probably with different banks, they have in housing loan itself, they will have 20 or 30 products. What you can do is you can simplify, you can populate all the products of a housing loan, vehicle loan, and different kind of jewel loan on other loans. You can have it a common say heading for that housing loan, and that can be populated in the file itself, so that you can select housing loan all products. Depending upon the bank, certain banks will have it own subcategories and categories so that you can easily select. But for other banks, this categorization will help you in selecting the sample in a quicker fashion. And when it comes to Excel, XLOOKUP, if you know how to use XLOOKUP, you can look up this loan balance file. This doesn't have, most of the banks doesn't mark whether that account is a standard or a substandard account in that loan balancing file. You have a separate NPA report file and a SMA report file, from where you can draw a XLOOKUP, so that whenever you select the sample, you can avoid this NPS in your samples, so that NPS can be separately dealt with. Yeah, this is a question with respect to Bhavadharani madam. The balance difference portion, which is treated as an unsecured portion. What is the loan outstanding minus secured security value, which has been fed into the system, which will automatically, the difference will go to the unsecured portion. Then it will be the provisioning, it will be taken, the system will take care of the unsecured portion provision and the secured portion provision.
Sorry, Anand, sorry to intervene. I think Bhavadharani started the question with a substandard asset.
Yes.
Bhavadharani, if you can unmute, she has started with a substandard asset. So in case of a substandard asset, there is no question of classification on the basis of the provisioning. I mean, classification on the basis of security value, because straight away it is going to be classified as 15% provisioning. That's all. So unsecured portion or secured portion is not going to be having an effect, no, for the purpose of provisioning.
Substandard alone, when it goes to D1, D2, no?
Then it will come. See, current year it is a substandard asset. So in that situation, the difference in unsecured portion, you will give an MOC only for classifying from standard to substandard. But as far as provisioning is concerned, you will not touch that because it is a substandard asset only. So it is classified as flat rate of 15% will be have to be provided. If the security is going beyond, that is unsecured portion is going beyond the limit, then you will have to add the increment provision of another 10%. I hope I have clear.
Yes, continuing with the usage of Excel.
Please.
Those who have been well versed with Excel know how to convert it to the text file which has been given into on Excel format. I'm not going deep into it. If anybody has any clarification specifically, now you can contact separately so that we can assist on that. But if you are able to convert it, in most of the banks, they have a separate tool also, you can inquire them. They have a separate tool which will convert the text file into Excel file, and they will give you the Excel file. But certain banks, they don't have that kind of tool, so you have to resort to your own methodology. And if you can bifurcate that, you can stratify your loan balance file and able to link with the NPA and SMA reports, then most of your work will get simpler, and it will you will be saving much time in selecting the proper accounts itself. And also, if you know a little bit of formulas, you can find out theoretical balance of the term loans, so that you can compare with the theoretical balance that is available with the loan balancing file. And wherever there is an outstanding balance is more than the theoretical balance what you have calculated or as per the system driven, you can have a look onto it, how the system calculated theoretical balance and your own theoretical balance differs, and what way it is affecting the asset classification, that you can check up within a random basis.
Rahman, you can announce to the people to raise hands, because if they are finding it difficult to type the question, let them ask the question orally. Ask them to raise their hand if you have any question. Otherwise, we can.
Raghuman, are you there? Raghuman?
Or you can also give the instruction. If they
Yeah,
are,
I will give the instructions.
if the members
Sir,
have
because
any question,
admin need to the mic, they mic unmuted, no? They need to do the unmute.
yeah, unmute us.
I'll talk to them, sir. I'll talk to them in the back end.
My dear members, this is a question answer session. கேளுங்கள் கொடுக்கப்படும், தட்டுங்கள் திறக்கப்படும். If you don't have questions, we don't have an answer. I hope you appreciate. Please post your questions. Bhavadharani, sir, can you brief about specific aspects to be checked in Kiran? It's not Kiran credit, it's Kisan credit. Kisan credit card loans, the renewal is not done generally, done on based on crop season. It is not Kisan credit card loans, it's basically Kisan cash credit only. KCC loans means it's not Kisan credit card loans, even though the credit card is given. It is as good as a KCC, it's a OCC only. Renewal has to happen. If it does not happen on the basis of the crop seasons, it will be liable for classification as an NPA. Once you say it is to be classified as an NPA, automatically they will come and do the renewal, even on the antedated. Please understand, this agriculture KCC loans and all is within the branch manager power only. So you can come and prepare the renewal letter on the earlier date also, he will give it off. There is no problem. Please ensure that it is being renewed off the record. I'm making it very clear. It is the only way it can happen. Otherwise, you place classified as an NPA and leave it like that. Generally, it is not that renewal is generally not done based on crop season. I'm not concerned at all. Renewal has to be done every year. Every year, it is not the question of crop season. The crop season is coming only for the purpose of benefit of classifying it as an NPA. That is, when the loan is given today for one season, until the next season, it is due. For example, I am giving the loan in the month of January, and the payment is the what do you call the harvest? I'm sorry. They are giving in the month of July. Harvest is going to happen in the month of January. Payment has to happen in the month of March. So when loan is given in the month of July of 22, the due is on March 23. It is not 1 year, basically. It is for a season. So in March 23, they should do a renewal. If that is not done as a renewal, automatically it will become an NPA after 2 crop seasons. That's all. So crop season is not for the purpose of renewal. Renewal is only on the specific period as per the original sanction as far as KCC loans are concerned. It can be 9 months, it can be 1 year, it can be 2 years, depending upon the crop season. So the KCC loan is given on a particular date, it's given for a period. For that period, the document is valid. After that, it has to be renewed. That's all. For the purpose of provisioning only, crop season will come into the picture. Yasodhan. I hope I am clarified about that. We'll go to the question of Yasodhan. Whether physical verification of gold is mandatory during the statute audit. Is it advisable to ask the evaluator during the physical verification? Anand, you would like to take up?
You can continue, sir.
Okay. Physical verification of gold is not mandatory. I am making it very, very point blank clear. Physical verification of gold is not mandatory for the central branch statute auditor. It is only for your own satisfaction. You can go for physical verification of gold. But you are supposed to verify whether the system of inventorizing this gold is correct. For example, they'll be maintaining on the pallet wise, whether the pallet count is correct, whether the number of packets which is available in the pallet is right. A couple of pieces, you can take it up and verify. Obviously, please understand, it is not the question of is it advisable to ask the appraiser to during the physical verification. It is not advisable. It is compulsory. You cannot even touch the touch the jewelry. They are supposed to take the jewelry. They are supposed to weigh, and they are supposed to show you the card. The card you can see it is showing an amount of 10 grams. They should be able to show 10 grams and put it back in the pocket, and they will have to keep it. You are not supposed to even touch. Please understand. So it is not the question of is it advisable. It is compulsory and imperative to ask the appraiser to be with you during the physical verification, number one. And you are not required to do a compulsory verification, but you are supposed to verify the system of inventorizing this jewel packets by way of ballots and numbers. And also there will be a register separately maintained. Whenever a gold loan is closed, a product will go out, next product will come or not coming. There will be an in-out register will be there. You have to verify whether the in-out register is properly maintained or not. As a branch statutory auditor, we are not supposed to do any physical verification. It is for your satisfaction, you can do a physical verification. For example, a branch is being taken where the total loans is 50 crores. And out of 50 crores, 35 crores is jewel loan. Obviously, they have larger, major advances, jewel loan. So you can't pick up some 10 items and cross-verify, but there is no compulsion for you to verify. Again, one more classic point which I would like to mention is go through the inspection reports, go through the RBIA reports, go through the previous statutory audit report, wherein they have said that there are some internal control weaknesses or inherent weaknesses are there, or appraiser has not been doing proper job. In that situation, you can take extent of checking a bit extra to verify more items to have your own satisfaction and nothing more than that. Thank you.
And also you can verify whether there is any extra packets or shortage in packets.
Yeah. Obviously, when you see the inventorizing, obviously when you are seeing the inventorizing, it will be automatically verified whether the numbers are matching or not. You're right.
Sir, whether after verifying and certifying it, if there is any fraud happen in that, like fake jewelry like that, whether we are responsible, because we are counting only the numbers, no? We are tallying the numbers only. We are not certifying the quality of the jewel. So whether we are answerable after doing this verification in both the concurrent audit as well as the statutory audit, sir?
The concurrent audit is a different ballgame altogether. The concurrent auditor is supposed to verify whether the securities are properly being verified regularly or not. That is his responsibility. But as far as branch audit is concerned, you are not under compulsion. Only thing is, you should not at any point of time should automatically clarify or give a clarification as if the other person understands that you have already verified all the jewels. You should not give that information. If you give the information, you are making a trap for yourself. But other than that, you cannot be held as responsible for any fraudulent activity which has subsequently happened. But if the concurrent auditors have in the earlier occasion something has been reported and you are not reported that, then there is going to be a problem. ATM cash is not matching with the books of accounts. Branch says it is maintained as settlement account by central office and books only show the mirror account and it will not match. Is this acceptable? Not acceptable. The question is very, very clear. In the LFIR on the cash and bank balances, the question is very, very clear. Please go through that question. It says that ATM cash has to be verified with the books of accounts and the same thing has to match. There is nothing like mirror account, etc. ATM cash is also maintained separately. It has to match. In case they are saying like this, give it in the form of a report, provided that mirror amount at least matches. If that also does not match, it's going to be a serious internal control issue. What they say as mirror account, it is maintained. Let them show in the mirror account and the settlement account. If it matches, fine. What probably they are telling is, please understand, there's a difference between what you are understanding and what you are telling. That can be. The settlement account and the central office account is only in respect of the transactions of that particular day. Every day, the other branch ATMs and other bank ATMs will be coming and used here. So in that situation, that will be maintained in the settlement account. But ATM cash on hand, along with the settlement, should match with the physical cash which is available. Probably that's what they are saying as settlement account. It is in respect of transactions of that particular day until it is squared off with the other branch expectation and calculations. Am I clear? But as it is, if they say that it is only mirror account and it will not match, it is not right. But the second point which I want to, which I drove, has to be properly understood. If it is in respect of transactions of that particular day, it will have an effect on the settlement account. Is cash verification compulsory in the branch audit? Absolutely not required. But once again, if you take up the cash book and examine whether dual control is there, and one day you verify that, you will have a satisfaction. You will have a satisfaction. And moreover, we will also be having a happy moment of seeing at least 3 crores or 4 crores of cash at one point of time. For that gut function alone, you can definitely go and verify, but otherwise it's not required. But if you take up the verification, please be very, very clear. You don't keep on verifying all the counts. It is not required. There's a bundle of 10 bundles. You pick up the 10 bundles. Normally what happens is when you take up the case of a 10 bundle cases, you will count the number of rubber bands which has been there. What will happen is in certain branches, it has happened actually, they had only 9 bundles. In center bundle, they will put a rubber band on both the sides. So you verify 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This happened. I don't say that it is not theory. It has happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You see the number band alone, it's going to be a problem. So please comfortably verify whether the 10 bundles are there. You pick up only few bundles, verify it and leave it like that. Once you pick up from the 10 bundle, 1 bundle you can verify, count it. You don't count it. You count it only to the extent of 35 pieces or 36 pieces and give it to the branch manager or branch accountant who is available. He will verify that a balance that comes and tell you 64 is there. If you have taken 36 and she is also saying 64, well, keep it right. This only is called as a clip counting. It can be used, but you are not under compulsion to verify the cash. But because that one question is being asked nowadays, whether the cash, ATM cash and this is matching, we are under a temptation to verify. It is ideal to verify. It is not compulsory to verify, but it is ideal to verify on the date of doing the audit. Just examine whether the cash balance is matching with that and this, and backward working as on 31st of March, whether it is matching, and whether dual control, that is both 2 officers are signing each and every time when they take the cash and dropping back. Once again, you will have to see the daily cash balance register for reporting in the LFR first question, whether the cash balance is carried at excess value. For that purpose alone, you will have to take the book. So to that extent, you can verify that. There is no compulsion, but if you verify it, do it in a proper manner.
To add one of our experience with the ATM cash verification is when you open the ATM cash box.
You keep the mic nearer to your.
When we verified the ATM, instead of the cash being loaded into the cash, the dispensers, it is being kept inside the ATM machine, but it's not in the dispenser. So if it is not cash is not kept in the dispenser, the ATM will not calculate it as a cash balance available with that ATM. So these kind of things can happen at very small instances. So always it will be better to have that cash, ATM cash, which is available as per ATM. The slip, you can take the slip. Daily slip is being generated at ATM, which is being available. 31st March, you can verify that slip and check whether it is tallying with the cash book.
Good.
Members, if you have any queries, kindly raise your hands. They will back and will unmute you. You just directly ask the question to the panelists. If you have, if you find difficult to, if you find it difficult to type the question, you just raise your hands.
Sir, one more question, sir. While selecting the sample for verifications of deposits, we are trying to get a report with current year debits and credits of all the deposits account.
Thank you, sir. Thank you.
But the branch team is saying that information is confidential. Is there any other way we can get such a report and select the sample in more appropriate manner?
Anand, you are taking up?
Yes, sir. And as far as reports are concerned, I don't think any report which is confidential with respect to the financial aspects, any management information which has been pushed on to them, managers separately, they can say. But with respect to verification of deposits, and if you have a report, I don't think anything they are denial by the branch saying that it is a confidential matter. They cannot do that because as such, central statutory as a statutory of the branch, we are supposed to get what all the information which is required for us to get our audit done. And then I think most of our auditors are given the audit login. So most of the reports which is required for audit, we can get it in the audit login. Or if you want a specific report which is accessible, which is required for audit, no, you can verify, ask the managers to get it. But apart from that, they have MIS reports which is separately for the management and for the managers. I don't think if you're asking such kind of report, they may deny.
Sir, சொல்லுங்க sir. 2 மணி நேரமாவா சார்? இல்லையே சார், ஸ்பீக்கரை ஆமா என்னன்னா ஸ்பீக்கரை இன்ட்ரோடியூஸ் பண்ணிட்டு இருந்தேன் சார்.
Raghuman, you are in online. Please mute your mic. Sir, it is a general question, sir. From my sir, sometimes when we visit the branches, some of the branches is not having the facility to keep the original documents with them. Whether it is enough to get the confirmation from the branch, or where the document is get it from some other branch, no? From that branch, if you get the confirmation, it is enough, or we have to go and check the documents, sir.
Anand, my answer, your answer.
Yes, sir. I'll answer. You can supplement, sir.
Okay.
As far as the verification of loan is concerned, document verification is also part of that loan verification. And if you wanted to have that document to be verified, you can ask the management to list what are the accounts for which the document has to be verified. So they can arrange for you to either verify at the premises where the documents are stored, or they can bring the documents to the concerned branch for verifications. I don't think you can skip that based on the say these documents are available at a particular place. Based on that declaration, you can skip the verification of document. And purely it is depending upon the selection of samples and what you wanted to select. And without verification documents, how will you know whether the documentation is proper, and how we can certify that in LFIR whether the loan has been dispersed properly as per the sanctioned terms and conditions? That should be examined based on verification of documents only.
Because Anand wanted me to supplement, I will definitely supplement. Now, one more additional question has been asked in the long form audit report. Wherever documents are kept at RICPC branch, you are supposed to verify how many documents you have asked and have they provided or have they not provided. So there is one question in long form audit report very specifically is introduced from 2022 onwards, wherein wherever the branch is maintaining documents at an RICPC branch, which is another branch, so they are supposed to give the documents to you. It is not that they will be bringing it to you, they will be taking you to the branch. You will have to ask for 10 documents or 12 documents as the case may be. The question is very specific. How many items have been asked? How the branch has given you all the questions you asked, which means the bank is expecting you to ask for the documents that have been maintained by the RICPC and then do the verification. Is it okay, sir?
Yes, sir.
Okay, sir. Okay, sir.
Right.
Sir, in addition to relating to another question, because no other question in the chat box, sir, that is why.
You are always authorized to, sir. கேள்வி கேட்கணும் சார், யாராவது கேளுங்களேன், அதான் நீங்க கேளுங்க, தாராளமா கேளுங்க, தப்பே கிடையாது.
As per the scope of audit, normally the NPA provision, some of the branches is answering that the NPA provision is provided and handled by the HO level. How can we verify that, sir? Actually, the provisioning are made at HO level. If they question it, whether we are able to certify it from the branch level, sir. All the provision is made at HO level. It need to be posted in the branch also, no, sir?
Please understand, provisioning entry is done at the HO level only. Okay.
Okay.
We are giving the entries as well. That is why what happens is NPA provisioning, which has been done on 31st of March 2000, identification only. I'm not talking about provisioning. Identification, which has happened on 31st of March 2022. You are supposed to give a certification that all those items have been passed in the entry in the books. So what has been identified as 2022, whether they have done it. provisioning is not done at the branch level. Definitely it is not done at the branch level. Once you classify it as a substandard asset, it is assumed 15% provisioning is made. If you classify it as D1, it is assumed that unsecured portion is fully provided for and 20% has been provided for in respect of secured portion. It is assumed. Don't expect that to go beyond that level, because we are not certifying the provision computation at all. We are classifying the SSA or D1 or D2 as the case may be, along with the security value. After that classification, your starting point itself is NPA of the previous year.
Yes.
So from that, where they have classified as D1, this year it has to be slipped down to D2. If it is in D2, you have to examine whether D2 second year. Otherwise, it has to go to D3. Once it goes to D3, automatically the provision is held at 100%. That you will have to accept that the central statutories are classifying as it is, because once it is identified as D1 or D2 or D3, system cannot change it at all. Provisioning will automatically be made. Don't question that. Okay. But at the same time, you are bound to classify that the classification is correct. Whether it is a NPA date is important. You have to identify that NPA date is correct. Once NPA date is correct, all the other rest things will follow. So you don't have to bother, because in the main audit report itself, we are saying that provisioning is done at the head office level. Once the disclaimer is there, you don't have to bother about it.
Okay, sir. The question is from your answer itself, sir. When we providing the provisioning of the date of NPA, sometimes the NPA is maybe the case is NPA 2-3 years back itself. Somehow it is got slipped. Now we found that whether what is the NPA date? Is it is the year beginning or
3 years back?
From the
3 years back, 4
3
years
years
back, 10 years back. When you are identifying this year, but you have identified this account has been an NPA for a long time, it is not the. See, please understand, you have to go to the question, RBI circular of November 21. In November 21, they have given a circular wherein they have said that NPA date is important. 6 questions are there, 6 points are there in this November 20. I don't know how many of the members have gone through the circular. Please go through the circular which has been issued in the November 2021, which has very, very categorically clarified that NPA date is important. And NPA date need not be only in the current year. It can be on any date before this area. So in that situation, they are asking us to identify that NPA date as even of, that is, the earlier audit has not been identified, means there can be so many reasons. It would have gone under the sample cases which has not been verified. So you don't have to bother. Once you identify in this current year, it is becoming an NPA. You can classify up to 3 years also. Obviously, once you identify an item which is 3-year-old NPA, this year it will become straight away D3. Please do it as D3. That's all. There is no compulsion. NPA date is important, but you have to have correct justification for giving that NPA date. Because if you don't give the date justification properly, then you will be held responsible at the time of regional office consolidation. So, if, for example, there is a loan which has been given in 2010. I'm telling you a classic case of education loan given in 2010. The repayment is supposed to start from 2015 onwards. From 2015, money has not come at all. So in that situation, the NPA date is 2015 June or something like that. It will be the date 13th of June. Please understand, my dear friends, it is not the month of NPA. It is the NPA date. Because that November 2015 circular, once again, I reiterate, I request you all of you to download that circular of November 2015 as clarifications given by Reserve Bank of India. That circular, you can download it. In that very categorically, it has been said, date is important. When an account becomes an NPA or SMA 0 or SMA 1 or SMA 2 is the date on which. When is the date? The date is not 31st of March. The date is not 31st of December. The date on which it has become irregular. And it is not only that date has become, when it is due, by end of operating data, the end of operating date. That is, for example, 31st of March 2023, the end of operation, EOD operations are happening at the time of 7 o'clock in the night. By 7 o'clock, money should have come. If it has not come, it becomes SMS 0. If money has not come for 3 months, it will automatically become NPA. If it has not been classified in the earlier, it was a mistake. Now you are rectifying the mistake, and the mistake rectification is not only for the current year, it is from the date on which it has become originally NPA.
Sir, I think Meenakshi Sundaram sir asking one question, which is whatever the question I asked earlier. His question is the
Collateral securities. Yeah, the collateral securities is submitted for loans while all the original documents have been kept in some other branch on a centralized system. How to verify the title dates for the new loans sanctioned during the financial year? Should the auditor verify physically the title dates for the fresh loans sanctioned during the audit?
If the loan is taken up for your scrutiny, for example, if it is a large advance, you would have definitely taken up for audit. In that situation, you are supposed to compulsorily verify, number one, particularly loan sanctioned during the year. If it is in respect of other advances, if that account is not coming under your samples verified, you don't have to do it. If it is coming under your samples verified, you are bound to go and verify.
Sir, this question is relating to the allotment. A few of the banks allotting that service branches where they only do the services. There is no income. There is only the expenditure is there. So, what kind of precautions need to be taken in that service branch audit, sir?
No precautions, sir. Any other bank audit any other company audit which you see, the same way you have to see here also whether the expenditures are properly maintained, properly accounted, whether all these expenditures is being shown is correct. Your normal true for you. You don't have to have any special attachment towards that. And more than that, you don't have to spend more time because the fees are also very, very low.
Yeah, fees is very low, but the things is even the LFIR and everything, even this year, most of the banks, all processing centers allotted audit rather than branches.
Correct.
Specific questions with respect to service branches in LFIR. You should concentrate both on answering those things and how the samples have been selected and how your audit procedures and methodologies are being there to answer the questions. That will be the right way of approaching the service branches. As most of the questions which has been answered, questioned in the LFIR will provide you the way in which you have to document it and what are the verification points which has to be taken care for service branches. That will be sufficient.
I think the questions. So until other question comes, kindly enlighten about that Forex verification, sir. What are all the things needs to be verified in Forex area, sir?
See, invariably, whenever you go for Forex is basically handled in a dealer's branch. So as far as each and every branch is concerned, they don't do the dealing directly. Invariably, I'm not talking about one particular bank. Most of the banks, they have one separate branch for dealer. So as far as this particular branch is concerned, you are bound to ensure that whether the accounting is done in accordance with the certification advice received from the dealer branch or not. I'm just taking classic examples. Today, a bill is being discounted and an amount of X amount is being taken from the other branch. I'm talking about a dealer branch. They are giving an advice, so much of amount is being credited. Please ensure that the rate at which it is being accounted for the purpose of foreign bill discounted is done according to the dealer's advice or not. Because as far as your bank is concerned, the branches will not be doing the foreign exchange transaction per se, because the foreign exchange transaction is done by the specific branch only, who advises the rate of the particular branches. First item. Second item, very important item is whenever a any export transaction happens, when the money is coming in, please ensure the money is coming only from the foreign soil. It has to come only in foreign currency. If it is coming in Indian currency, it has to create a suspicion in your mind whether that account is genuine or not. Reason being, the export cannot be sorted by way of inland proceeds, which is not right, which is not possible. That is first item as far as exports is concerned. Same way in case of imports also, the payment has to go by way of foreign exchange. Once again, the buying rate of that foreign currency will be advised by the dealer bank whether that is accounted properly and the payment is being made by the particular company on the basis of that. And once again, local currency cannot be utilized for the purpose of making the import payments. This is in respect of both imports as well as bill discounted in respect of customers. When we are going into the cases of LCs, foreign import LCs or export LCs, once again, that there will not be any payment in respect of those LCs. Only when it is getting defaulted, that payment will happen. Otherwise, normal course transactions will keep on going. When there is a default, at that time, the payment will be made only in Indian currency, which is very, very rare as far as import and exports are concerned. But wherever it happens, at that time, the payment will be made only in Indian currency. Other than that, you don't have any botheration. You depend on the advice given by the dealer branch. On that basis, you can go.
Sir, there is a question from Bhavadarani Karnakaran again. Home loan is restructured in February 2021 to provide 2 years of moratorium and increased tenure and reduced EMI. After restructuring, the first EMI falls due on February 25, 2023, and the second due on March 31, 2023. Both EMI not paid. Does this come under SMA2 as on March 31, 2023, or does it amount to not fulfilling restructuring conditions, and we have to treat this differently?
So as on the 25th of March, this kindly note.
Sir, Raman, please show the question.
Yeah. Shall I read it again, sir?
Show the question. He wants to read it.
Yeah.
Yeah, as far as the date is concerned, the date is not March 31, 2023. The date is March 25, 2023, as the EMI falls due on that March 25. So when there is a default in payment of 2 EMIs, it will automatically classified as an SMA2, and it so you need not worry about whether it is fulfilling the restructuring conditions or all. All these things are when you verify whether the restructuring terms, as per the restructuring terms, whether the loan has been classified or not. Once it is classified and the first EMI is due on 25th and is not paid, and second also falls on March 25th, which is not due, it needs to be classified as SMA2 on 25th to March 2023 itself. I don't think restructuring, restructuring conditions, whether it is amount to not fulfilling restructuring conditions or not, it is restructuring they have done for giving a moratorium, and since they have not adhered to the moratorium conditions, the loan will slip as per the asset classification norms, as per the IRAC norms.
But LFR has will require you to comment saying that the restructuring, according to the restructuring, payment should have started in this of these 2 accounts. Money has not been received. That will come as a comment on the advance. More than that, I would like to add one supplementary issue in this particular matter. See, as I told you, the date of NPA is 25th of February and March 25th of February 2023. Exactly. That circular of November 2021, once again, please go through the circular, in which it has been mentioned that wherever a sanction is being given in respect of the earlier loans, the date of each and every installment should be mentioned in the loan document. That is what it has been mentioned in that particular circular. In respect of all the loans started from this period onwards, the date of each EMI has to be mentioned in the loan agreement itself. It is not fixed statement which has been that it has to be mentioned, number one. What will happen in respect of loans given before that? They have given a condition that this item has to be completed before 31st of December 2021. They have given a cutoff date. In respect of existing loans, what has to be done? They have mentioned very clearly in respect of existing loans, whenever a review happens, this documentation has to be corrected. So which means they are making it very clear that date has to be mentioned in the document. According to that, SMA 012 has to be classification has to happen. This account will squarely fall under SMA 2. Non-pulling of restructuring condition will automatically get an attractive note in the long form audit report. That is a separate matter. Arun,
Sir.
அடுத்த கேள்வி எதற்கா ஃபாரக் கேட்டீங்க அந்த மாதிரி வேற ஏதாவது சொல்லுங்க. ஏதாவது வேல்யூவேஷன் கொடுப்போம், ஏதாவது கேட்டாங்க, நம்ம வந்து கேட்கலாம்னா கொடுக்க முடியாது. I will definitely share one important point with all the people. Please examine inoperative accounts. please examine inoperative accounts. At least 5 inoperative PPF accounts, 5 inoperative SB accounts, 5 inoperative current accounts. Go and look at it. Try to do an operation, which is called as breaching. You will have to try to breach the particular condition. If the particular account goes into operative by way of automatic examination, then there is a serious lacuna in the system. Because the question in the LFAR as far as inoperative accounts is very, very clear. Does the branch carry out the inoperative accounts operations in a proper manner? Whenever an operation is being restarted, whether that necessary sanction is being done or not. So which means an inoperative account is to be shifted to operative. There is a scheme which is available according to that has to happen. For this, understanding this, you have to go into the system, go into few of the inoperative accounts and try to break open that item through the staff to make it operative. If it gets permitted up to the particular scheme, for example, in an inoperative SB account, there is no operation at all for the past 3 years. It has been identified as inoperative account. Go and try to draw an amount of 500 rupees from that account. If it allows you, then the system is not right. They have not correctly filled in the system. Very important, because inoperative accounts is the most fraud-prone item after the jewelry. Not even after the jewelry, including the jewelry also. Inoperative accounts is one of the serious fraudulent transactions which is happening. Not only inoperative SB accounts, inoperative PPF accounts also is a place where fraud-prone areas are there. So please request all the members to go into the inoperative accounts, try to break it and try to, a couple of items. Don't have to see, but only thing is, in your notebook, you please note down, I tried to break this inoperative, it is working very well. Final stage, it will have to say that it is inoperative, it will not be permitted to operate. That screenshot you download and keep it with your working paper, that will solve the issue. This is as far as inoperative accounts is concerned. I would like to have one more value addition, which is not normally done by the branch auditors. Sundries and suspense. Previously, it was 3 years, various year-wise breakup has to be done. Now it is not like that. They are asking you to give a statement of more than 90 days in respect of one transaction, more than 180 days in respect of one transaction. That has to be given. But leave alone that. Please go through the sundries and suspense in a detailed manner. Because only when you go through the transactions in a detailed manner, you will be able to ascertain whether any unusual items are finding a place there. Once an unusual item is finding the place, you please ask for that specific record of those items. It can take you to lead you to a lot of stories. So please go through the sundries and suspense, number one. Second issue, even if there is no unusual item, there can be long pending items for which you may be required to pass an entry. One important item which comes to my mind immediately is, take the case of advance or fixed asset. They would have already decided to buy a 5 computers for the branch. They would have placed an order in the month of September 2022. They would have got the supply in the month of January 2023. They would have installed it on 15 February 2023 also. But only thing is, the bill has not yet been approved by the controlling office. So what will happen is, until the bill is approved by the controlling office, accounting will not be done. But reality is, the fixed assets is already installed, which means you are supposed to capitalize the asset, and not only capitalize, you have to provide for the depreciation also for a specific period. This item will not be normally done because the branch will be under waiting for the approval from the controlling office. This is an item. So whenever there is an advance for fixed asset, just it has to open up your minds and ears to examine whether any specific issues are there. On that basis, you can verify that. These two important items I thought can be a value addition to the members.
Sir, another one, sir, relating to educational loan. Many of the banks, when we request when we analyze the education loan, they said as per the government and RBI thing, it is we can extend up to 15 years. Like that they told. So every time they restructured before the March, they saw it as every account is an performing asset. So what is the latest provision relating to educational loan, sir?
There is nothing like latest provision. I'm making it very, very point blank here. There is nothing like latest provision. I don't know what's happening. Am I visible?
Yeah, it is audible and visible, sir.
Oh, okay. There is nothing like latest provision as far as education loans is concerned. This RBI has given a guidance note. That person has given a guidance note. He has agreed to give it as 15 years. All these things are nonsense. Whenever any loan is reclassified or restructured or rephased, the standard asset will become substandard asset straight. Let it be 15 years or 20 years or 30 years, whatever it is. But at the same time, when the restructuring happens, if the restructuring happens during the year 22-23, you are supposed to verify whether the restructuring is done after a proper application from the borrower. Without receiving any application from the borrower, if they sign just like that, because they wanted to classify it, it will not be classification at all. Once you do a restructuring, straight away it will become a substandard asset only. Because just because somebody is allowing you to restructure, the circular is, master circular is very, very clear. Whenever you do a restructuring, it will become an NPA. It becomes substandard assets. So nowadays they are not aggressively doing that. They are only going and doing a modification in the manual. Manually, they are going and modifying the date of installments. Because of that, it has an impact. But please understand, probably Anand can throw some help in this identifying there is a report which is the exception report which is being created by way of wherever manual corrections are there. There is a report which is being generated by the bank. On that basis, you can say that any manual correction which has been done from the original date of sanction which has been given, it is definitely a susceptible matter which can be examined further, and you can verify and examine report accordingly.
Anand sir.
With respect to the deposits, there are two more files is available for us to examine. One is the CASA report, the current account and SB account jotting down file, and another is the FD file. If you can able to convert that into Excel, both the file will provide you with the details of accounts which are active, which are inoperative, and which are say unclaimed, and all these classifications are done on those two files. And you can pick a sample from that file and you can verify whether the particular status of inoperativeness and other things has been properly marked or not. And one thing it has to be noted, if you are able to have a lookup on those inoperative account, say SB account or a current account, and for that particular SIF number, there is a loan account. We can also verify whether there is a loan associated with the inoperative account and find out whether the loan transaction are proper, why this account has been inoperative and there is a loan is available. And that kind of lookup also will help you in finding out inoperative accounts which has a loan which has been not classified as an NPA or classified as an NPA. The loan account is not recovered, but it is an active and there is some transaction which is being carried out. Most of the banks, when the borrower has an SB account, they mark lien on that account for if the account turns into NPA to have a recovery, so that they can have a monitor on the transaction that has been reflected in the savings bank account or the current account, so that when there is inflow, they can recover the loan amount. This is the normal principle. So you can have a lookup on those files also, so that the verification can be quickly done on those inoperative accounts also.
அந்த இது கொஞ்சம் சொல்லுங்களேன் சார், அந்த corrections manual, அதாவது they cannot go and do modify. That is what, how do they change the NPA is basically they change the last installment date. So
Yes,
manual corrections made in the system.
Even they are corrected the date of starting of NPA, sir, the starting of installments. They increase the holiday period to 5 years, 6 years, like that also they did, sir.
Correct. அதான் அது எப்படி கண்டுபிடிக்கிறதுன்னு that's the report which is available in the exception reports. I'm not able to identify the exact name of the report, but there is an exception report which is available, manual alteration or manual correction in the database.
So 31st March report folder, if you are able to see that report folder, there are a number of reports which is generated, where you can find out a report which says that any loan account, any modification done manually by the branch or at a regional level, there that file, if you can catch hold of it, you know all the modification that has been carried out at whatever level, whether at branch level or regional level or zonal level, you have the flag, what is the account which has been modified, what the item has been modified, and you can find out from that report. And if you are want to have a even more better control, you can verify that to 2 or 3 years days before that year-end operation also. At times, banks run this different kind of reports on a day which is not on the year-end basis. So if you can catch hold of that report folder, when last 1 week or 10 days, if you can find out, wherever this kind of operations are there, more reports would have been generated on the particular date. So if you can find out what the day end operation, that is the year end operation entry which has been carried out on a particular date, not at a year end, that date will have a more number of reports on that folder. So if you can catch hold of that folder, you can find out this alteration done report which has been generated and available, and you can verify and find out what are the alteration which has been carried out.
Sir, another question, sir. So normally we do statutory audits of the branches. We classified it as a NPA. With the same account in few of the branches upgraded by restructuring or something they did and upgraded and show it as a performing asset. So for the next year auditor, is anything need to be checked? What are all the things classified as NPA in the previous year?
Yes, whenever an NPA account is upgraded, it is the duty of the auditor to find out whether the upgradation is as per the norms. So as per IRAC norms, if an account has to be upgraded, an NPA account has to be upgraded to a standard asset, then the entire outstanding as on the date of upgradation, say you are going to upgrade on 31st March, all outstanding till 31st March, not only the 90 days overdue portion, all outstandings up to 31st March or the date of upgradation should have been collected, and after collection only you can upgrade that. It applies both to principal and interest. So there should not be a single pay overdue on the date of upgradation. That has to be verified by the auditors.
No, I think Arun's question is, if there was a wrong classification of NPA in the last year because of some restructuring or whatever it is, I have to question. Arun, correct?
Yes, sir. Yes, sir.
See, what happens is, if they have done a wrong calculation in the last year by way of restructuring, and restructuring has been done, and the restructuring is approved, they are given a sanction ticket, etc., and it has been subject to audit, and audit has also signed. In that situation, you don't have authority to ask a question in respect of an earlier year's restructure. So that you cannot go and question now. But if the payment is not according to the restructured conditions as given in the earlier year itself, then you can ask a question. First matter. Second matter, if it is an unaudited branch and restructuring has been done wrongly in the last year, in that situation, when you identify the asset for the purpose of classification of NPA in the current year, you can very well identify that the restructuring itself is wrong. You can do that. Am I clear?
Yeah, clear, sir. Sir, another question relating to KCC, sir. Normally, KCC account given as the kind of OD thing, correct? No. So once the harvesting period is over, they have to repay it, and again they got the entire amount. They need to repay it and need to renew it for the next year. But mostly what happened in the many branches, sir, only they get the interest and renew it. Whether this is correct, sir?
It is not correct, but not wrong. Okay. Because RBI is very, very clear. The cash credits in respect of those transactions has to be done by way of a renewal on that due date. So once they do a renewal of a document, it is automatically making us very clear that the principal has been recovered or instrumented, because it's a cash credit account, running account. So as long as they don't draw the money further, they have drawn an amount of 25,000. If they have to deposit 25,000, once again draw 25,000. That is a very, very mechanical issue. But the real understanding is they should pay and get it. But it doesn't happen. In response to these accounts, only interest is being done, but only ensure that it is done within the due date itself. They should not do it after 2 crop seasons of that day and pay only that interest. That is not acceptable, because once 2 crop seasons are over, it would have already become an NPA. At that time, there's only interest recovery is not acceptable. Like Anand was just now telling, the entire arrears has to be clear.
And
any other questions, participants?
Sir, relating to deposits as well as jewel loans, mostly most of us think that jewel loan is a secured, so no need to classify it as a NPA, because it is entirely, most of us did, sir. Don't surprise, it is the reality, it is a practical. I'm talking about the practical thing. But whether I think it is wrong, but so when we have a discussion, it is enlightening the people, those who are all attending. So once make them little bit vigilant on that part, sir.
Anand, பேச சொல்றீங்களா?
Yes, sir. As far as gold loans are concerned, the security portion, when it becomes an NPA, if the margin which is available for not available for repayment of the interest, then the account will become an NPA. Asset classification, what the RBI says now, for the purpose of classification of asset, say NPA. So if the due date is say falls on 2 years after that the loan, or 1 year after that 1 year, no, if it is not repaid, that account will be actually be classified as a non-performing asset. And when it comes to income recognition part, what they say is income can be recognized till the availability of margin is available. So the bankers can have, say, if you have a loan on deposit, there is a sufficient margin available on the loan on deposit, say interest has been accrued and is kept available. To that extent available extent, you can recognize income on the interest income on the loan which has been availed on the deposits. Over and above the margin, if it is the income has to be accrued, that has to be deferred. This is what the says. But as far as classification is concerned, the account will become an NPA as based on the due date condition and the interest repayment terms which has been available. So if it is loan has to be cleared on 12 months, loan has to be cleared. It has to be cleared on 12 months, and if it is not cleared, it passed overdue for 90 days. After 90 days, the classification will become an NPA. Only the interest, so accounting of interest will depending upon the availability of margin.
Okay, sir. Sir, is this necessary for unit visit for the statutory auditor, sir?
No. Like what I explained in the initial stages, whether jewel verification is required, whether cash verification is required. Similarly, the in-unit visit is not required by the auditor, branch auditor. But at the same time, once again, I make it very, very pointedly answering your question. There is no compulsion for the branch auditor to go and verify the units of the respective cash credit accounts or OCC accounts or OD accounts. But if you have a suspicion, if you have a viewpoint that it's better to go for a verification, nobody can stop you from going for the verification. But at the same time, you are not under compulsion, particularly in respect of branches which are covered by concurrent audit. It is the responsibility of the concurrent auditor to periodically verify. We are only supposed to verify because it comes under credit monitoring. It's coming under monitoring and supervision. The question in the long form audit report as well as in the main audit report is whether the securities are properly there. See, it is assumed that as long as they maintain the systems of verification of unit visits on a regular basis by way of the concurrent auditor as well as the branch management, we are not required to go for that. But at the same time, if you have a suspicion in any of those one items, you can definitely go for a verification of the stock or unit visit. Otherwise, it is not required.
I think someone is again Bavadarani Karunakaran. CC provided as a percentage of turnover with adequate collateral security. Business not in operation for 2 continuous year, nil turnover, but limits renewed without reducing the drawing power. Interest servicing done through funds earned from the another group company.
Whatever it is, account is straight away loss asset.
Sir, in addition to that question, sir, so normally most of
first of all, let me answer this question fully.
Okay.
Because just because I said loss asset, you should not classify it as loss asset. I'm telling you, once an account is not under operation at all for a period of 2 years, obviously the business is going for a debt situation. In that situation, the account is not recoverable at all at any point of time. Just because the interest is being recovered, the CC account, because please understand, NPA provisioning as far as Reserve Bank of India is concerned, they are not saying that whether once interest is required, no problem. That is not the issue. Yeah, there is one more question, one more item as far as out of order is concerned, where there are no credits which is regularly coming, then also you can classify it as an NPA. Once there is a security which is available, leave alone the stock, if there are some collateral securities available, you can classify it as an NPA or D1 so that the security will be covered and balance will be provided for. But as it is, once an account is not coming under operation, once the system is, that is business is not under operation, it's a potential item to be written off. So I straight away you can classify it as loss asset also, provided there is no stocks are available or no securities available. The securities are available, you can classify it as an NPA. Exactly, since you have mentioned as 2 years, exactly leave 3 years in the 24 months. 21st month, you can class. So once it is classified as NPA for 21 months, it becomes D1. So classify it as D1, provide for unsecured portion and provide for 20% on the secured portion. With that, the problem will be solved. Next question in
Arun, sir, normally related to the CC only, sir. There are two things, sir. The security itself.
Once again, she has specifically mentioned interest servicing done through funds and whether it is serviced or not, I'm not at all bothered, because there is no other transaction and business is already stopped. When the business is stopped, where is the question of revival? It should not have been renewed at all. The renewal itself is faulty. The renewal itself is faulty because renewal of the CC account is happening only when the business is carried on. When the business is not carried on and the renewal has been happening, that itself is a serious issue. You have to go and examine credit appraisal question. When the renewal happens, when there is no business at all, the credit appraisal itself is faulty. Credit appraisal is faulty. Money is not coming regularly. Business is operated. All these conjunctures go to the situation that the account has to be classified as NPA statement. So tell me, Arun.
Yeah, my question also is in addition to this question, sir. The limit, even though CC limit, within the limit, interest is serviced, but normally the 4-5 times of the limit need to be the churning of the account. That is the yardstick we have for any CC account. If it is less than that, whether there is any provision to classify it as NPA, for example, 100 crore is the limit, but the account credit is around only 10 crores or 15 crores. Whether we can able to classify it as an NPA, sir, because already you told even though the credit is interest is serviced, we are able to classify it as an NPA. Is there a specific provision is there, sir?
See, you have to understand the NPA, that is prudential norms, in a proper manner. First thing what he is telling is, as far as CC accounts, I'm talking to the CC accounts, where if a CC account will become out of order on 3 conditions. One is interest not required. Next is insufficient credits which is available for being that. Third is in respect of stock statements not received, etc. But there is a separate clause in the RBI circular itself. Wherever there is a business deficiency are happening, or the business stoppage is happening, or business continuity is being questioned, you are authorized to straight away classify any item as an NPA. First matter you have to understand. Second matter which you have to understand is, there is no thumb rule like 5 times, 6 times, 10 times of the turnover as the limit, etc. It is not there. I have a classic case in one of my clients plans itself. There was no turnover at all in this current year, but they have a limit of 10 crores. It's a capital infrastructure company. What they do is they create infrastructure in respect of another place. The agreement between the party and this thing is that invoicing will be done only in a year, end of the year, by way of percentage of completion. For a moment, let us understand like that. In this case, there was no turnover at all for the whole year. Only in the month of March, there was a percentage recognition and they calculated a particular sales and which is being there. Money has not come. What is the money which has come? Only in advance, which has happened in the first stage. The final payment will be happening only on the delivery of the asset. So in this situation, that need not be a collection. There need not be a turnover. Still an account can be a performing asset. Please understand case by case. The same thing is not applicable in respect of a trader. In respect of a trader, if there is 100 crores turnover is there and 20 crores is the limit which has been given, 100 crores turnover has to happen in the place. If the turnover does not happen, there is a potential danger of the turnover is wrong. They are giving a wrong turnover, or the turnover is being operated in an account other than this particular bank, which is diversion of funds, number 2. Number 3, the company is not doing well. Obviously, the limit has to be downsized. What happens is, how do you downsize the limit? Downsizing is not only on the basis of the stock value, it is also on the basis of the turnover. Once you take a loan of 10 crores, you project a turnover of 40 crores and apply for a limit of 10 crores. If you have not achieved 40 crores, the 10 crore limit itself is wrong. Credit appraisal is wrong. But for that purpose, I don't have to classify it as NPA. But if the turnover is not achieved at all to the extent of 40 crores, no problem, you can give it in the LFAR. But if the turnover itself is only 10 crores, where against the limit of 10 crores. It is a serious issue. You can definitely go through the examination of their financial reports and give a report that it is a potential NPA. Significant account which can be significantly falling into NPA, which is going to happen in the next year or next year. So potential NPA, you will have to be insignificant weakness in an account becoming an NPA. Anand sir, supplement reka?
As far as the previous question that Bhadarani asked, with respect to she called as a collateral security, when it comes to CC account, the prime consideration is considered as the prime security itself. When the business is not done and there is no, you know that there is no business is operating, the prime security itself becomes, it is say it has become null or zero. So when when the DPS becomes zero, automatically the account becomes an NPA.
So there's a question.
Question la supplement brand saying they do huge cash business, do cash which is not reflected in the bank statement, but they have stock. Can we accept this? Don't accept this. I will tell you two classic examples I always share in my classes. Take the case of a petrol bunk. Take the case of a petrol bunk. Sales will be only by way of cash, but they have to make payment to IOC or PPCL only by way of a check. Take the case of an oil manufacturing company. They purchase only by way of cash because they buy oil seeds from various farmers, but they collect money only from the oil companies where they supply this oil company. So each and every case has to be examined in an independent manner, but there can never be a situation where the entire transaction is done in cash. Okay, let them do it in cash. What do they do with the cash? Can they make payment of cash? More than 10,000 rupees, they cannot pay cash at all, 48(3). Even though that is not applicable in respect of bank audit for this particular purpose, you can definitely ask this question. They are all hoodwinking. They are only hoodwinking the auditor, saying that they do, okay, which means they are not at all going to bring these accounts into the transaction at all. If they are doing everything in cash, they can take the cash at any point of time. In that situation, the loan is not to be taken from a bank. The loan has to be taken from an Hawala operator, not from a bank. So banker are not Hawala operators. They don't have to give money. Please make it very clear to the branch. Branch can say anything they want. Ask them to give the same thing in writing. The same branch manager, ask them to kindly give it in writing, sir, I will take it. Nobody will give it in writing. This is the reality.
As far as working capital loans is concerned, it is for the operations of that particular business itself. When you say the entire business is to be run in cash, the necessity of working capital and fund to be funded by the bank itself, it is to be questioned. So the appraisal of the particular CC itself is to be questioned and to be seen that whether it is as per the terms and conditions. Whenever a CC account is being sanctioned, definitely you will have the terms and conditions that all transactions to be routed to the CC account, and turnover which has been projected has to be achieved. All these terms and conditions which should have been mentioned. You need not ask for other explanations. If the terms and conditions have not been adhered to be by the particular loan, you can straight away classify with respect to the account, what is the nature of the account and what, whether it the dues are there, whether the transactions are not coming through the dam. You can very well classify based on the sanction letters and the based on the adherence to the sanction terms by the borrower. You need not worry about the various explanation that has been provided by the management in this regard.
I think it's time up. Quite long we have discussed, almost 1.5 hours. Rahman.
Yes, sir. Yes, sir.
Will you release us?
Yeah, absolutely. Absolutely, sir. Absolutely. Arun sir, do you have any other questions, sir?
No. I just
our secretary sir has got all his doubts cleared from our experts today, it seems.
No.
He's becoming a
that's on the lighter note,
other 20 people.
Yeah, that's on the lighter note.
Because on behalf of 20 people, I am raising the questions. Everyone
Thank you very much,
facing this problem. So many of us having difficulty to type.
Sure.
Thank you very much. Common questions arising in everybody's mind.
Yeah. Thank you very much, participants, for your active participation and questions. Hope your doubts are all clarified by our experts, C.R. Sundararajan sir and Anand sir. For the benefit of our members at large, with the permission of our resource person, we are recording this session and hosting in our SIRC YouTube channel, sir. So with that, we have come to the conclusion of Bank Branch Audit Q&A Series 1 successfully. For the kind information of our members, we have a Series 2 planned on 10th April that will be handled by CA Veeramani PM from Ernakulam and CA Gopal Krishna Raju from Chennai. And we have our third series of Q&A session on 14th of April that will be handled by S. Ramesh and from Chennai and CA Venugopal Gella from Bengaluru. And series 4 on 18th of April handled by Sridhar Y and Lakshmanan M, both Sridhar from Trivandrum and Lakshmanan from Chennai. So I request all the members to register in large and get benefited out of this. So requesting Arun sir to formally propose a vote of thanks.
Sir, thank you, sir. Thank you, Sundararajan sir, Anand sir, for accepting our invitation and sparing your time and answering the queries, even though it is a small group of people. So all the queries, a few queries are raised by the participant. It is also very practical. So I thank the participant as well as our back-end team, Raghuman and others for supporting us to have this Q&A session. Sir, thank you, sir. Thank you once again from SIRC for taking your time and participating in this seminar. Thank you, sir.
Thank you.
Thank you. Thank you.
Thank you, one and all. Thank you.